Welcome to RANsquawk's e-morning briefing for Tuesday, 2nd of June 2009. Just coming to 8:30 now in London. A quick look around the markets. Obviously, we saw some strong finishes in the equities in the US yesterday. Wall Street, the SPOO's finishing or moving through its 200-day moving average. Obviously, getting a good lift on positive data, particularly various ISM manufacturing PMI data throughout the globe from China, Europe, all providing impetus for the lift yesterday. That fed through to the Nikkei, did finish up marginally. However, we've opened up in Europe and equities slightly lower, most likely a bit of profit taking from those big gains we saw yesterday. And elsewhere, very much of the focus continues to be on US Treasury Secretary Geithner. Obviously, he's in his second day now of talks in Beijing. Just going through a few of his comments that were made overnight. The Treasury Secretary saying that China have given their vote of confidence and understand why the US higher budget deficits are just a temporary necessity. He also points out that reassures China that their dollar assets are safe. Again, paying somewhat of lip service to the Chinese there, being one of the biggest bondholders or holders of US debt. He also comments furthermore that the world economy still faces a very powerful storm and some early signs of stabilisation, but sees sufficient demand for US Treasuries. And on a similar note, did see the US President Barack Obama saying late yesterday that he's not concerned about Chinese demand for US debt, citing sources. Elsewhere, sticking on a similar theme coming out of China, the chairman of the China Construction Bank, the CCB, the former head of China's FX administration, he rejected suggestions that the dollar could be replaced quickly as a global reserve currency, and that was an article in the FT this morning. And elsewhere, the Japanese Finance Minister Yazano, he said that Japan's worst post-war recession has already hit bottom and a full recovery may not come though until early next year. In terms of other things that have happened overnight, did see the Reserve Bank of Australia, they had their interest rate decision where they unanimously voted to keep rates on hold for the time being. The second month in a row now, rates there at 3%. It did, however, note that the inflation outlook does leave the door open to any further easing. And elsewhere, North Korea, they continue to develop in terms of potential missile launches. Beyond that, the South Korean news agency now pointing out that North Korea is readying mid-range missiles for launch. Again, we're awaiting any further updates as to that headline. Looking elsewhere, just a quick look in equity specific. I've seen already reports that JP Morgan, they're looking to raise around $5 billion in order to repay the TARP fund. American Express also looking to raise around $500 million. Did see late in the US session last night, the Fed, they outlined their criteria for repaying TARP funds. They did say that banks must tap equity markets before repaying the TARP, hence the move from JP Morgan and American Express this morning. And elsewhere, looking at the European bourses, the FTSE currently slight underperformance, down around 1.2% against the CAC and DAX down around 0.5% at the moment. One of the biggest losers there is Barclays Bank, who cornered to the front page of the FT this morning. Sheikh Mansour, one of Barclays' largest Middle East shareholders, last night announcing that he plans to offload his stake in the British bank. Again, they're seen down around 13% at the moment. So looking ahead then for the rest of the day, UK data-wise, following on from the positive manufacturing PMIs from yesterday, we'll be eyeing the PMI construction number from the UK at 9:30, and then we'll also be eyeing net consumer credit alongside mortgage approvals and therefore money supply, and then that will lead us on to the focus at the Eurozone will be the unemployment rates for April, where analysts are expecting that number to further increase to 9.1% is the consensus today. And then no 130s in the US, attention there will be furthermore on the housing market when we'll see pending home sales for April.